I was good, everybody. It's Joe, not coming back at you with another video. So this video, I'm going to do a super brief breakdown of Thursday, August 6th. Now, understand my last two videos, I said they were going to be brief. They ended up being longer. This one is going to be brief because I'm traveling today on my trip, right? So I just wanted to show you guys this quickly, just so you guys can see what I'm talking about, right? So like this, obviously a no trading day because we're in August and I don't touch price for August, but I still want to show you guys a quick recap so that you can still learn it and hopefully the information I'm going to share with you opens your eyes to what's actually happening, right? So before we begin, we check the news, right? And Thursday is no news, of course. It's still August, so we don't touch it. And typically, because NFP week, typically I don't touch price for the Wednesday through Friday of NFP week. So of course this is Thursday, so we wouldn't touch this day anyways. But I still want to show you guys this just to give you some insight. So jumping in on the 1 hour, this is where we would determine the higher time frame bias, right? So price, if we look at the S&P, price is bearish, right? Because this was a push up right here, but then this was the previous swing low that made this high, and obviously this low was broken under, and then a low was formed here, and then another low here. So because this is the most extreme low, this was the swing high prior to low, and this was not traded through, right? So right now, clear as day, we're bearish on the S&P, and the same with the NAS, right? NAS was originally bullish with this push up, then this low got traded under, right? Price blasted under, and then you see price, continue to make lows and lows and lows until it got to this low right here. And this low down here, um, you know, is the candle till 8 o'clock, and then I believe, yep, this is a high right here that was not traded through, right? So we've basically been bearish the entire time. Cool. So now skip through and one more candle. Cool. So now we are at 845. So because we're bearish, we look to the left of 830 and we want to mark our previous swing high. So from 830, we have this high right here. This is the most recent swing high. And then if we do the same for the NAS, right, you'll realize that this is the swing high. So of course there was no trade that was taken on this day. And so I'm not gonna really go crazy, but as you can imagine, right, to mark targets, right, we'll have a target here because this low right here is technically the low of the day, which is also the London low. So these pretty much make almost equal lows, and then obviously you have another low here and another low here. However, this is the most extreme low, but you can have targets, at this level here and then over here as well. Right now for the NAS, this would be the most obvious low because this low right here is not only the London low, it is also the low of the day. So because I'm bearish, I want to see price, ideally leave a low available, and then you want to see price push up before going down to take it for a sell, right? You want to see price go up and then take it down for a sell, clearing this liquidity up here. So that's pretty much what we're looking for. You can see we're watching price, and here with the NAS, price continues to make new lows, right? So this is now pretty much the newest target because of the lowest low, and it's not the case for the S&P. So now here, right here, you see, so what happened, right? This bearish candle right here, this tall candle in the middle right here, this one is the 930 candle. So as you can see, the 930 candle made the low of the day. So at this point, I'm effectively out on the NAS because if we're bearish, right, we want to see price make a high and clear our, oh, sorry, this is buy side liquidity. So this should be blue, right? So I apologize for that. But yeah, so we want price to go up to clear buy side liquidity before taking price down, right? And price did not do that. Price just went down and made the low of the day or the low of the session. So I'm out, right? I have no interest in trading that. Now for the S&P, I'm watching it. However, this is not a good sign, right, of it opening bearish because then it's potentially going to make the low of the day, which it does right here. So basically at this point, I'm out on both pairs because, right, I'm bearish and I want price to go up here, so then you could take price lower, not for price to make the low of the session. So I'll pretty much out. However, if I were to just fast forward some of it, right, you're able to see what happens. price, even though it made the low of the session for both pairs, price does in fact make its way up and clear liquidity. And then after liquidity gets taken, you'll see what in fact happens, right? If I skip to live data right now, let's say I put on 2-minute time frame, right? You're seeing that price does in fact tap into the area that we're interested in before going back down. The same idea here, price made its way all the way up here before now looking to go lower. Now, the reason why I'm showing you this, and I'll put on the 5-minute time frame now. The reason why I'm showing you this is to show you guys the game that's being played, right? This is why you might hear the 90-90-90 rule, that 90% of traders lose 90% of money within the first 90 days. And that's because in theory, right, if price can either go up and down, of course price can consolidate, but in theory, if price can go either up or down, that means typically there should be a 50-50 chance. But most traders, right, 90% of traders lose in this market. And the reason for this is because price is playing both sides, right? You're seeing one of the highs and then one of the lows right here. And what is price doing? It is dipping under that and dipping above that. So it's actually taking out traders on both sides. And so this is why a lot of traders struggle with trading, because they'll just trade in alignment with the trend, right? If you're following this trend right here around the 5-minute time frame, you're seeing that price is bearish. And so trend traders will think that price is going to continue going bearish. And so because there's a lot of traders that might trade support and resistance, right? If this candle is forming because this is a wick, right? But at some point it was, a full body candle. So if price is full body with this much momentum, there's probably some traders who are going to be breakout traders who might try to take price lower right here. And then that leads them to get stopped out because price in fact reverses against them. Same idea for traders up here. Going to be some traders who they see this and they'll see this as resistance, right? Because they see price tapped it 3 times. So they think, okay, it's not expected for price to go up any higher. So they'll just enter in on the short, put their stop loss above the level and then try to target down here. But then they get stopped out because price does in fact go above that level, right? So, and then for any traders who trade breakout, right, you see these two bullish candles form, right? So there's traders who think that after this level is broken, right, price closes above it, that price must be breaking out to the upside, right? That price is now bullish. However, price was not bullish because we went in with a bearish bias. And then as you can see, this is what happens, right? Price goes up, right? Price went up and cleared this liquidity with this push up here, right? It clearly cleared this high and then it took price lower. So I'm showing you this to show you guys the tendency with price at. If price in this case is bearish, and when price is bearish, it has a tendency to want to target previous highs and old highs before then going down. Why? Because there's liquidity that rests above these areas, right? There's liquidity that's resting above it. So they're going up to clear it. So then at this level, they can enter their shorts and take price lower. And you can see, right, price after, price came up here, made its high. You're seeing that price is now pushing lower. The same idea, price came up, cleared these highs, and then now it just blasted through lower. So showing you guys this to highlight to you guys the game that's being played, that you want to determine a higher time frame buy so that you have your direction as far as where you expect the market to go. And then once you have that direction, you look for price to, go against that bias, right? So if I'm bearish, which I was on today, I'm expecting price to push higher to pretend that it's bullish, to trick traders and thinking it's bullish, so then I can sell it at the top and then ride the wave to the bottom. That is, and if you think about it, right, price came up and pushed here, and ideally, if you were to take a sell entry, right, if entry present itself, you would be selling around this area, which would basically be you selling at the top, right? This is you selling, and price even came up and cleared these equal highs right here. So much liquidity was in fact taken, right, with these highs, right? Price obviously came up and pushed above that, and then now it's aggressively selling off. So if price gave us an entry, right, we would basically be selling up here, and then we would basically be taking price down lower. So that's the recap for the video. Hopefully you found it to be helpful and insightful. Hopefully you're able to see what's actually going on with price, so that you can apply this to your own trading. So that rest of the video. Enjoy the video. To leave a like and subscribe as we're on the road to 1 million subscriber, guys. So once again, it's Joel, and I'm out. See you guys for the next video.